Hey guys, it's Steve with Futures and Charts, and at the moment it's Wednesday. It's March 19th, and it's my wife's birthday. Happy birthday! And we are looking at about down 9 cents. So these or crude oil is pretty flat, not really doing too much after the Trump and Putin talks, and there's just other things going on, such as the Israel striking Gaza again. So there's some there's always some push and pull in the market, so that seems to be what's going on. So, but diesel's up about 1.3 cents, so it's actually trying to go up a little bit. Gas is up as well, but looks like just fractionally a quarter of a cent or so. So, um, anyway, so I guess the main thing is to let's have a look at the charts and see what they're trying to tell us after a few days. I think I was on last Friday, and I was kind of like to let the market make a move, and if there's something big, I'll cover it. But give the market a few days to actually establish some type of a direction, and then we talk about it. So let's go. Let's go look at the charts.
Okay, so I thought today I would look at something a little bit different. This is actually the crude oil WTI, and this is the 5-year chart on the weekly. And as you can see, I've got some lines drawn on here, some trend lines, that we're trading in a kind of a wedge pattern is starting to form. And we are at the bottom of that wedge. And I kind of think with everything that's going on with Trump wanting us to be energy independent, and wanting the oil producers to produce more oil, which they're meeting on today, I believe, prices are going to have to remain in a certain area for the energy companies to even want to go drill for more oil. So I think we're probably going to be stuck in this range for a while, would be my guess. I don't see us spiking unless something crazy happens. But if you're in the market for buying your diesel, when you see things that are in the bottom of a channel like this, especially you're going to have to use it that year, so why not buy when it's at its low point for that year? And that's kind of where we're at right now. So let's take a look at today's diesel. We have, since we are in the bottom, we actually kind of created a new, not entirely new, because going back here to would have been December of last year, we actually had a little bit of a lower, so it's a higher low here, but yet we're breaking out of this pretty steep trend line here, and so it's been what now? We're on the 6th day on the upside of that trend line, and so we're well established above it. So, and we got a little bit of strength today. So this is actually trading at 220.62 right now. This hasn't refreshed, but we're still a green candle. We're still up on the day by about a little over a penny. So that indicates to me that it's even a seasonal thing. It's usually about this time of year things start to climb up again through April. So I would look for this to continue, even if it's just creeping up a little at a time. It's over. If you sit on your hands and wait too long, you're going to be paying more, I think. So now, like I said before, just looking at the crude oil chart over the 5-year, now is probably a good time to get your diesel needs for the year possibly locked in. So so that's the crude and diesel outlook. Let's look at the U.S. dollar. It's it's been falling quite a bit. We had a pretty big drop here, and now it's starting to trade sideways a little bit. So yeah, I would probably look for it to trade in depending on what the Fed does today and how his comments are afterwards. Could move the dollar a little bit, but I just think we're going to be going sideways to lower, actually. So maybe down to that 101 level. Let's look at wheat. Wheat has been in an upward channel after this huge fall off. I mean, it was looking really good, thinking things were going to just keep marching up towards possibly 650. But we had a huge fall off, but we're fighting back now. And as long as we stay above this trend line here, which we're hanging on to right now. We did wick below it earlier, as we did here, but as long as we stay above that trend line and keep moving up, the 50% retracement would be 576. We're at 564 right now, and then the next level to try to get to would be the 618 level, which is about 590. So, and that's a pretty common step that they take when you're looking at the Fibonacci. So, and one more thing, let's look at the cattle. I think I told you in one of the other videos here that this was forming after a big run up. It had a correction, and then now it has formed a cup with a handle formation, and it has actually cleared our old high over here. So it looks like the cattle market is still very strong. So that's a good thing for you cattle ranchers out there. So hopefully you can lock in some contracts for next year and come out of this thing looking pretty good. So that's what you need, because the wheat market is not good. So if you're somebody who is diversified and is able to raise cattle and you're trying to grow some wheat, at least you have some strength in your portfolio. So, well guys, that's about what I got for you today. So have a good one, and thanks for watching Futures and Charts.